Good morning, guys. Good morning, good morning, good morning. Let me know if you hear me okay. Let me see where everybody is at. Testing 1, 2, 3. Somebody give me a sound check in the room. Let me know if you hear me. All good, Kelvin. Great. Okay, you guys seeing the screen? Screen is good. Okay. We had a couple of tweaks in the indicator, which I'm going to get to, but let's just take a look and see what's setting up on the charts right now. It's all just blowout opening bids, so we really don't have any trades that are possible. So we'll just we'll watch it. We'll watch it a little bit here. See what's going on. NAS had a big pop. Now it's turning back down. So we'll see as it may. Let me I want to just do one thing here. Hang on a second. Let me see if I can do this. Wow, data folder. I've updated. Let me see if this works. Indicators. Control V. Oh, that is the copy. Okay, so that's today. Okay, so that's fine. So then it's delete. I've updated the indicator. I want you to download it from the Trader Tools box. Let me just make sure I have it properly correct. Yeah, it should be 1.93. This is the 5 one, but the 4 one is also 1.193. I want you to apply that indicator to your charts because it had just a tiny little error in logic regarding how we create failed code, and now it's been fixed. So all these little dots that show failure of trade are now accurately portrayed. So 1.193 is the one you want to be looking at right now. Just looking to see. Wow, that's a pretty sharp turn on the open of NASDAQ, right? Wow, that's an interesting little move here. Don't have any setup trade unless you just want to chase the move, which is something I don't want to do anymore. Really collapsing. That's interesting. Anyways, how's everybody doing? As I said, please download the latest version of the indicator. I'll have the really volatile. I am just interested in trying to figure out like why the turn on the open. We don't have any news. I just got my second jab, so I've been out all morning long. So I just got back to the desk, so I'm really kind of really out of the loop as to what's going on. Let's see if there's anything in the news. Let's see if the news is giving us anything. I don't think anything hit the news. Do we have any calendar news today? I'm just totally out of the loop right now. Let's see. Oh, maybe, huh? Is Morgan Stanley in trouble? Oh man, you see this? This is a fraudulent account. Somebody trying to copy Kathy. Nothing much here. Okay, so this one warn the Ellen shouldn't beautify. Okay, all right, nothing going on. Yeah, it's all bullshit. Okay, we just it looks like we're just really flipping hard on the on the open. Would have been a good chase trade, but not, not a trade they want to do. Here's what I want everybody to kind of focus on right now. So the really, really, really interesting structure, the really great way to trade is, and I'm only going to do this for the NASDAQ and then NASDAQ and the Dow. And then we'll try to figure out, I'm still struggling with currencies, but I have some ideas. So I'm gonna run some ideas by you. But on the NASDAQ and the Dow, the absolute greatest way to trade, in my opinion, is the hour against the minute. And here's what I mean by that. So if we go on the hourly chart, right? All we want to do on the hourly chart is to know that, what trend we're in. We're in uptrend, even though we just had a massive, massive correction here on the hourly chart. We're still, for all intents and purposes, until moving averages cross, we are in an uptrend, okay? So if we are in an uptrend on the hourly chart, there's only two types of trades that we allow ourselves to take. We allow ourselves to take what I call the strong buy trades. Let me just undo this because we've had like a big move. The strong buy trades are basically any breakout trade with a strong triangle, higher high, irrespective of whether it has a failed component prior to it or doesn't, right? And in this case, this was a long. This is I think it's actually interesting. Well, keeping this in mind that this. Oh no, is this Mt5? That's what time. Let me just make sure. Is this hang on a second. I just want to make sure this is on GMT. What is the time on this? 16:13. No, this is 3 hours ahead of GMT. That's right. That's the thing. So this is it's 3 hours ahead of GMT. So the other thing that you obviously want to do is I don't trade until 10 GMT. So in this particular case, it's only 12, so it's 2 hours back. So it'll be 14 on this particular chart. It's really annoying. You really don't trade till about 1400 on this particular chart, GMT. So we really don't have any trades over here. But if you were taking a trade at like 12 would take me back to like 8 GMT. So it's or 9 GMT. No, 9 GMT. Yeah, 9 GMT is okay. So I would have taken this trade to the upside. This is strong buy trade. The only other trade you allow yourself to do is what I call a weak sell, which means that when you have a sell signal, right? Let's find one that's legitimate. Unfortunately, this would have been a good trade, but it's not the what I consider to be a perfect sell signal. Perfect sell signal has to have a lower low arrow with a failure. So in this case, this would have been it was a failure, but it was a little bit of a higher low arrow. So I wouldn't have taken this trade, but I'm looking for okay, for argument's okay. This was actually, I took this trade yesterday in the close. So this was a classic weak sell trade, meaning that we're in an uptrend, and the only sell signal you allow yourself if there is a failure to the upside, then followed by a strong lower low marker. So you have to have this marker, not the tiny little arrow like this, but this marker with a red dot. Then you take the sell, and then and that takes the trade. So you take all the up trades and just only these kind of sell trades. That's if you're an uptrend, and it's completely reversed. If you're in a downtrend, you take all the sell trades and only green arrow up trades in a downtrend. Right? Does that make sense to everybody? Does everybody understand the basic structure of the whole thing? So yesterday, if you were trading this, it literally was like a 5-to-1 ratio. Like you had all the buy, every buy trade during market hours, boom, 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 hit targets. This was the only sell trade that hit target. And then if you wanted to trade the opening of Asia, and the opening of Asia to me, you passed like it's about 8 p.m. New York, which is midnight GMT, which is like 2 or 3 o'clock on this particular chart, which is really, really kind of crazy. Yeah, I guess it would be over here. is that right? Let me make sure. I always get confused on this chart. This chart is 4 hours ahead of you. Is this 4 hours? Ah, man, hang on. I'm sorry. I hate, every broker has a different time. So this is, it's 1600. The GMT time is 1300. Yes. So it's 3 hours ahead. So 8 o'clock p.m. my time is 2300 GMT, which in this case would be 2 o'clock in the morning on this chart. Sorry, I'm just trying to, this is so, it's. Okay, so you really didn't have any triggers here last night. I mean, this also would have been an interesting trade, but it wasn't um, it was a failure trade, but wasn't the strong failure trade. So I wouldn't have done this trade. So I wouldn't have taken this trade. You really don't have anything in this chart, because all of you don't want to be trading during the opening of Asia has a move, and like the opening of Europe, which is like 2 o'clock in the morning my time, which is 6 GMT, which would be like around 9 o'clock in the morning on this chart, has some potential. But even then, it's it can be very, very choppy. Again, remember, you're going to trigger lots of false failures in a range bound environment. There is no way you can win with our strategy if you are in this environment, right? It's just not going to be able to escape the churn, and that's why you want to try to avoid it as much as possible. So, this is like a 1400. What's the absolute low here? 86. I mean, the only antidote, in my opinion, against a range-based market is that you trade to the strong side, meaning you only trade to the long side, right? You're in a range-based market, so you only take trades to the strong side, which in this case is the long side. And you have to trade with a 20 stop, because 20 stop is so wide that it will kind of escape most of the range noise. And if the true trend, which is the uptrend, reestablishes itself, you'll be able to stay alive in the range to get one good trade off. So if you are in this kind of no man zone, right? No man zone, you certainly have to have wide, 20-point stops to give yourself room to breathe, to survive the up and down range. And even then, you could still get clipped to the downside, and only then to have it reestablished. But regardless, if you are finding yourself in this quiet zone, and I consider it to be the quiet zone from, so I'm just trying to go New York time, New York 10 p.m. to New York 5 a.m., which is 0200 GMT to about 900. 0200 GMT to 0900 GMT is just really, really dead time. In that particular time, you only want to trade to the strong side, if at all, with pretty wide stops. But generally, you don't want to trade, right? So you avoid all that time, and you come back into the market once 9 o'clock comes. You take this trade, boom, boom, boom. Today, it just happens to be like only one trade possible because it's just been so strong, and and everything else works well. So to me, that is really the greatest, best way to trade our ideas. And same with the Dow. Dow is strong to the long side on the 1 hour chart. Therefore, you take all the upside breaks completely. And in fact, if you just want to stay to the strong side on the shorter term time frame, you're fine. I think you can just avoid trying to get cute with the short trades, because the short trades only work at the point of inflection, at the point of turn, right, in the bigger trend. But taking the short failure trades is a decent compliment. They definitely do work. They're just very rare. But regardless, the whole point is you are using the best of our tools to put yourself on the highest probability side of the dominant side of the market. All right, does everybody understand that? Is everybody kind of clear with the general structure of how you model these trades. Okay, so the next question then becomes is, what do you do with FX? Because I mean, indices are really clear, especially the Dow and Nasdaq, and even even the German. I think so let's look at the German here. The German on the 1 hour is a clear uptrend. So let's say we just stay. The problem is I just don't know what the high liquidity hours for the German, because I just don't trade it. But clearly, if we just take the strong buys on the German here today, let me just go backward on this. So strong buy, strong buy on the German today, strong buy on the German again, and just don't even ignore, just sort of ignore everything else. Even this strong buy, I think, survives. So this is 15,299, 15,300. Yeah, it goes to 10 points. 10 the 1020 on this certainly works. The German is a very weird entity because it's kind of like spiky like Nasdaq, but sort of doesn't extend the way Dow does. So I'm still trying to get around how I traded. One cool thing, by the way, for those of you who trade futures, the DAX, they introduced a micro DAX contract, which I may try out, because that obviously allows you to trade much smaller sizes. I think it's like 1/5 the big DAX contract. I think it's 1/5, but allows us to trade the same strategy on like a $10,000 basis, account. So it could be very, very cool. So the bottom line is the structure is really great. There isn't a shortage of instruments to trade it. At this point, I'm literally myself just focusing on Nasdaq, and then my next, once I sort of really master the strong to the strong to the short, the strong side, weak side structures, I think I'm going to also add the Dow, because the Dow obviously really works on that idea as well. But when it comes to FX, the principle is good, but I think again, one of the problems is that I've been experiencing, because my FX book is essentially break even. Now, break even is actually I would consider it to be a huge win, because when you're running like a continuous EA and you haven't really refined it, and it basically keeps the edge of break even, usually all EAs just kind of degrade right into like miserable losses right away. That's a big it's a big sign that you're on the right track, but it's not fine tuned. And my thought on FX was that we need to apply kind of the same principles that we do to the indices, and I actually think that going shorter may be the solution. So here's what I have in mind. First of all, let's just sort of synchronize on the most liquid FX pairs, right? Again, the whole idea of what I'm trying to do, which I think really makes a lot of sense, is you refine on one or two instruments the general principles of your trading thesis to the point where they are working like clockwork, where you really have a tremendous amount of confidence. I mean, they're obviously always going to fail, but if you're failing 1 out of 5 days, you are succeeding tremendously in this business. So you refine those principles, and I feel very confident that I've kind of really 95% refinement on my Nasdaq stuff. Once you do that, you then begin to broaden the application of those principles to other instruments within the same sector, right? So to that, if you're going to follow that principle, you don't just kind of throw this, this idea against 20 different currencies. You go against the most liquid currencies, the most volatile currencies, which in this case we'll take the 4: euro, cable, yen, euro, yen, right? Those are the 4 highest liquidity currencies in the marketplace. And my thinking is that what if we applied the same parameters that we use for Nasdaq, meaning that what if we trade 1 minute against the 1 hour, right? And so here's some ideas. So here's the euro at the 1 hour, first of all. right? So the first thing we see on the 1 hour is a pretty clear, distinct uptrend from, I think, like yesterday, right? So what date is this? This is, it's actually not even yesterday, it's this morning. So this is 10 o'clock, this is 7 GMT. So it's 7 GMT, which is okay, because basically I want to trade the euro from like 6 GMT to 14 to was it 1500 New York? 1400 New York is 6 to 16. Okay, let's sort of like sit. So let's say I want to trade all my currencies, with even the yen included. Although I know yen can be definitely traded in Asia, but like let's just synchronize on a simple time frame. So we're going to trade 6 GMT to 1600 GMT, which is basically the opening of London to kind of the closing of London, right? That's really all. So that's when you get the biggest liquidity movements, right? So 6 GMT on this case, which is like 0900 on this particular chart. That's when it breaks to the upside. So now we go to the 1 minute chart, right? So now that means we're a strong bias, right? And we basically want to go to the 9 o'clock. Sorry, I want to move this back. Okay, so I want to go. This is about 9 o'clock on this particular chart, right? And this is what I'm talking about. So we're strong to the long, means we're only going to take longs. And I'm on a 1 minute chart. I'm going to trade 1020. I'm going to trade 1020. So if I'm going to trade 1020, I'm long here 72s, right? 73s, and I'm just targeting 83. Boom, I'm done, right? Okay, I keep going. I don't even bother with the shorts right now. Let's just sort of ignore the shorts. Again, I'm long, strong to the long, and here I'm at 79. I'm looking for 89. Boom, 2. So now I'm 2 for 2 on the euro for the day, right? Then I am just ignoring. I'm still, my structure is still positive, and I got nothing else. That's it. That's all I got, right? Now let's take a look, and I have not looked at any of this, by the way, ahead of time, so I have no idea. So let's go look at the pound. So the pound right now, this is the pound on the hourlies. The pound on the hourlies literally just becomes positive at 1400 hours. So literally just so 1400 hours. That's minus 11. That's 11 GMT. Prior to that, it was negative. And remember, we said we started around 6 GMT. So let's go on the 1 minute chart. So on the 1 minute chart, and this is the thing that you kind of have to be flexible about is you need to understand where it is on the longer term time frame. We're going to have the scanner for you guys, and the scanner is obviously going to make it much more automated and easy. But for now, I think it's really good to do this manually, because then you really kind of absorb the whole thing. So we talked about, so 9 o'clock on this chart is basically 6 o'clock GMT. That's when we want to be starting, right? Get over here, sorry. So we're looking around 9 o'clock on this chart. So here we go, 9 o'clock. And what is this? Why is this control? Combo alerts, delete. Okay, so good. So remember, we are strong to the short at 9 o'clock in the morning on that 1 hour chart. As you saw, the trend was still down. It did not convert to a long bias position until about 1100 GMT. So now this is 600 GMT, right? So in about 4 hours, the cable starts turning positive. But until then, it's a negative trade, right? So we get short here, right? Boom, easy 10 points on the 1 minute chart, right? Here we get short. This is actually the first. Oh no, what is it? 11, 9? Yeah, at 11 GMT, which would be like around 1400 on this particular chart. It'd be about 1400 on this chart. So here we get faked out. So we're 1 for 2, right? Totally normal. We get blown out on the reverse side, and this is obviously a change from negative to positive trend. Then we get at 1100 GMT, which is about, what's 11 plus about 1500 on this particular chart. We start getting long signals, right? And that would be like, I guess somewhere around here, right? So that would be, yeah, somewhere, I guess it'd be some, oh no, it would be over here. It'd be like 1400, somewhere over here. You start getting a long signal. So this signal works well. So that's a winner. This signal is just still floating. We're basically floating. We have a 20-point stop on this, so we're not stopped out. It's 3804 against an 84 stop. It goes down. It went down to 89, and it's kind of floating against us. So cable obviously always a problem child. So for now, basically, cable has 2 winners, 1 loser. Euro had 2 winners clean. Let's take a look at the yen. What's the yen telling us on the and obviously the best, sort of like the best way to trade this is when you're in a long-term continuous trend, right? When you're in a long-term continuous trend, then all of those short-term signals are going to be super great, super great. Wow, Nasdaq is really crushing, falling apart here. How's the Dow? Okay, I'm watching the Dow too. We don't have any signals right now, so no trades. But anyways. The yen here, however, is in a very problematic point. It's sort of like in a non-defined trend. We really don't have an uptrend or a downtrend to trade. So I honestly, I would not even do anything on the 1-minute charts, because what you want is some kind of a establishment of, we like to see trend separation, even if it's small. You want to see kind of trend separation on the charts. And ideally, what you'd like to see is, let me just delete this. One of the cool things about our indicator is that even on the longer term charts, if I put this on longer term charts, the moment you see the caret, the moment you see this little signal, that's a sign that the trend is at least significant for now, right? And so like, you could say, well, I'm not even going to bother taking 1-minute charts until the caret establishes itself, and then then you could try to trade. In this particular case, by the way, if you went by on the 1-minute charts, most of these there was a lot of counter trend movement, but I think because you were in a 1-minute chart, you would have caught all of these downward movements cleanly and avoided all the upside movements. Or if you wanted to mix and match and you wanted to trade the upside failures, you probably would have had a good chance of trading the upside failures. Anyways, the point being is that the longer term trend is best when it's established for a little bit. So sometimes you have to be patient. Like right now, there's nothing on the long term charts that gives you any directional bias. And perhaps the greatest thing we can do here is just stand away, stand down, just don't do anything, right? Let's take a look at Euro Yen here. Okay, so Euro Yen is in a pretty clean, clear upward trend, right? Pretty clean, clear upward trend. As by the way, those of you who got stuffed on the Euro Yen trade today, no, it was interesting because so a lot of times K trades and my trades synchronize, but when they don't synchronize, I feel like my my indicator generally is better, but that's just my own bias. Like I was long Euro Yen this morning off my indicator. So anyways, you see an upward bias here, pretty clean, clear, definitive. Moving. The way we define trend is one above the other, separated. If you have that, you're in good shape because it's a strong bias to one side. And then we can just go to the 1-minute chart and find those optimum entry points when the breakouts really happen our way. So long breakout, beautiful. Long breakout even over here, it was good enough, I think, to give you that 10 points. It's 38. The high over here is 45. Not quite, but it eventually, we never went far below it. So it eventually made the move over here. So this was like I think 3 or 4 hours of our upward trend. So if you had taken just taken the upside moves and all of this stuff, you would have had very, very decent entries. You know, you had a little bit of heat against you, but it's minor. And that's the beauty. That's kind of, I think, that was sort of my insight, is that once you see the clear establishment of trend on a longer term chart, our early to trend. Remember, what do? We are early to trend. That's the only thing we're good at, is early to trend. And if we are good at early to trend, then if we get to the shortest time frame, the 1 minute chart, we should be the best. We should be the earliest to trend on the strong bias, and just trade that to your heart's content. And one of the reasons why you definitely want to avoid the weak side. So in this case, the weak side being the short side, because it's so this is a weak short failure, is because the 1 minute chart on currencies is almost inevitably going to give you, it's never going to extend for 10 points, big points. So it's going to give you a lot of false positives in a 1 minute chart. That's why what you really want to just use it for is strictly the long bias entry, right? You don't want to, it's not like the indices where we have lots of good two-way action, even on a 1 minute basis. On FX is good for 10 points in 10 hours, not 10 points in 10 seconds like indices are. So you need to understand the differences, and you need to understand when these things are meaningful and when they're meaningless. And here it's just meaningless. So we can just use the one side, the strong side, to help us trade the structure well. And of course, the EA can be configured to trade one side only, one logic only, and just ignore everything else. So so that's good. All right, so that's kind of like me ranting and raving all morning long about all these ideas, because I just wanted to put everything together that we've been working on for a while. We don't have, we've had just clearly a very, very schizophrenic market right now, with with a big failure, big spike up and a big failure. It feels very exhaustive to me. Like if I get failed sell signals, I'll be happy to take them, because I think the market could really kind of turn. It's Friday. It looks like we want to take profits, but that's just me biased. That's great. Peter is saying he's got no losses. That's great, Pete. That's great. I'm glad you're enjoying it. What I'm trying to do is just refine it as much as possible, because we know that the general principles of our structure really work, and now I want to take those general principles and make them as specific as possible, make them as precise as possible. Because the whole idea here is, as I said, I always make this quote. Everybody who's been with me is just sick and tired of this quote, but I love this quote. Bruce Lee said that, I fear no man that practiced 10,000 punches one time. I only fear a man who practices one punch 10,000 times. And I'm just trying to practice one punch 10,000 times. One idea on one instrument over and over and over again, so that I can become a master of that one idea, and then I can take that idea and run with it. Does that make sense to everybody? I mean, you can do worse than taking wisdom from Bruce Lee. Yeah, Fumihiro likes that too idea. So that's basically it, guys. Have the 1.93, 1.1.93 is the final build of the indicator. Play around with it. If you're looking for longer term ideas, I think we certainly can make longer term ideas. One of sort of like my other grand big themes, and this is something that once we master kind of the one-to-one entry, one of the things that I really realize is, okay, remember, we're early to trend, right? Now, a lot of times the trend just doesn't really go anywhere, but there are maybe one time a day, maybe there are 2 times a day when we're early to a massive breakout, like a big ass breakout, right? And wouldn't it be cool if we did a ladder exit? Like, wouldn't it be cool if we had, we had an entry here of, let's say, 10 units, and we give up, and we have like a, I don't know, 20-point stop, and we give up a unit at every, square root of 20, value. So like, 5, 7, 14, basically scaling out until like your last unit of the tens is given up at like plus 100 on the move. Because what that does, obviously, is it builds a pyramid of profits for us. That's kind of like my grand big theme of this particular. It's going to be a rare trade. It's going to be like, most of the trades are going to be just 1 or 2 units out, and then you're break even, and that's it. You're done. But if you get a trade that you can just kind of colossally give up, give out on, then you really have a kind of an interesting idea. And what's very cool about that is, especially on currencies, where you can go to micro units, you could like literally take a 10,000 unit position and just puke it out at 1,000, like at 1,000 unit ladders, and then that last final one is a significant P&L even on a tiny basis. Or you can do 10,000 units on 100,000 one, same kind of thing. But basically, it's kind of it's just super interesting as a structure, I think. So it all has to do with us. We're, as I said, our main expertise now is getting into trend early, right? That's what we're good at. We're good at getting into trend early, and then we can exploit that particular skill set in 100 different ways as we go forward. But that's that skill set is what that's what we're doing the 10,000 time practice on. So anyways, I hope you guys enjoy this. Any questions? Any thoughts? Don't have any today, unfortunately. Got no setups, but we actually had good setups yesterday. If you guys traded post live, there were 2 or 3 just classic setups that really worked well, that I posted in my charts. So I'll make sure you update your charts and watch them, and you'll have a chance. I should have it on Monday as a test. EA is ready, but I need to configure it and upload. I'll configure it, upload it over the weekend, and then you guys will have it on Monday. We can go through the configuration, and you guys can trade it. All right. Okay. All right. Beautiful. Everybody have a wonderful weekend. We didn't do much today, but it's much better to get the principles right. And if you have any thoughts, any ideas, any comments, definitely come back to me on anything that you do. Other than that, next week, let's all kind of share our trades. I think one of the things I want to start doing is, all of us are doing trades in off hours. I want to share those trades. Everybody's gonna tell me what trades they did, how they did it, why they did it, because I think it's going to be really helpful for us to not just understand the process, but maybe get some really creative ideas from other people in the room. All right. Okay, my friends. Everybody, enjoy the weeks. Yeah, I mean, that's my point. Karen, I'm there with you. It's taken me, forever to just get to that realization. Let's not say that I'm there psychologically, but just appreciating that thought. It's taken me a long time to get there. Great, Peter. Pete, I got to go right now, but let's take a look at the screenshots on Monday. We'll start sharing ideas, and everybody can take. By the way, does everybody know how to take screenshots on Mt5 Mt4? It's super easy, super easy. They actually allow you to do it built into the thing. So if you click this particular icon, this is the picture icon, right? And let me pop up my window. Well, you'll get this window, and it says active workspace, active charts. You just always want to choose the active chart, assuming you have a trade on here somewhere, or you want to annotate your chart. You can just hit that, say okay, and it will give you it will take you to a website where it prints out the image, and you can go save as or copy as image, and just literally paste that into the into the room, which is exactly what I do when I show you my ideas. So that's it. Looks like NAS is starting to turn a little bit. We're still sharply lower off the highs. So this particular turn is not going to be a strong turn, meaning that the arrow is going to be below the prior arrow. Therefore, it's not going to be a strong buy. And and again, like it all depends on how loose or strict you want to be with your criteria. I'm trying to be relatively strict, but you could say, okay, you know what, we are long-term bullish. We're strong to the long on the 1 hour. 1 hour is clearly an uptrend. So if we get a buy arrow, even if it's a weak buy arrow, why not take it, right? You could go with that thesis. I just think that that's not going to be as clean a trade as getting a strong arrow. You want to be a little bit more patient with the signal. But I'm actually curious. Like I'm wondering if this is going to break out to the upside. We're looking. So this is the third. This looks like it's the third arrow in the uptrend. It would have to break that blue line high in order for us to give a signal and provide us with a buy entry. So one last thing, I keep saying one last thing. One thing that another thing you can explore for more interesting trade ideas is, so the trend break is our bread and butter trade. Like it's our bread and butter trade because that works the earliest, that works the best. We really like that trade, so on and so forth. But that principle of short-term, 1 minute against 1 hour, is not limited just to the trend break. You could bring back the reversal trade. So if you wanted to go, and I was going to just simply say, you could expose the reversal trades just to make them by default. I've covered them, but like if I made them true, I say okay, and here's the reversal trade. So remember, reversal trades require us. We're going to be long. They also can provide very interesting possibility entry. So here's a reversal trade here. So you're buying here 11. The low over here is 6. So it's a very, very small drift against you. And clearly you're not. Basically the whole point is any one of our signals that provides an entry into a dominant trend is a decent signal, right? Like right now, by the way. So let's play this game. This is actually turning on my futures. Oh no, not quite. It was turning positive, but not quite. Did not. Oh, that's interesting. I wonder. Okay, so that's interesting. For some reason, the arrow on this thing is disappeared. But if this candle completes, what do we have time? We can play this game. So we've got 15, 16 seconds. If this candle completes as an arrow, we could take this trade to the upside as not a strong trade, but worth a shot. But it needs to complete as a breakout candle. So far, nothing going on here. Also on Monday, we should have the trading view indicator for you guys, which would be really great because that's going to be sort of much easier to just gauge. Nope, nothing breaking out right now. Although this candle seems to this next minute candle seems to show some power. I'm dubious about this trade because obviously, we've had a big sell-off. This seems like a retrace rally. It hasn't really come near the opening session highs, but the trend in equities continues to be up. So you don't doubt the trend. You keep it going. If this doesn't complete, then I'll just let it go. But if this does open up an up arrow, maybe we can trade this a little bit. But I think the most interesting thing that I sort of came up with this week is this whole minute against hour relative positioning, which undoubtedly helps us stay on the right edge of the market. So this is really okay. We're long. Let's get long here just for fun. at 32, and let's see if we can squeeze anything out of it. I mean, again, this is not our trade. It's very, very extended, but you know, might as well just press one trade here. It's not a great edge trade, but it's not a horrible edge trade. But you know, it may make us, you know, we could get, it could make us pay, because we, you know, what the couple things that I really don't like about this trade, it's very, very extended off the moving averages, so you can come back to the moving averages just on it could still stay in an uptrend and just basically retrace back down to the moving averages, which is another thing that I don't like. And secondly, it's not a, you know, it's basically a breakout against a massive downtrend here on the 1 minute chart, even though the longer term trend is strong. So it's not a strong upward flow. It's just a reflexive upward flow. But you know, let's give it a shot. It's still the most important variable here is the uptrend. The 1 hour is an uptrend, and we have an uptrend breakout, even though it's a weak uptrend breakout. So we're going to try and trade that edge, and see if it works our way. And we'll give it a couple of minutes to see if we can resolve. I had like 3 or 4 points to the upside, and now it's starting to fade out against us. So probably not. Might as well just cut the cord here at 24. Let it go. You know, if I wanted to stay true to the setup, I'd give myself the full 20 points, but it's not. You know, it's not worth it. It could still work if you want to hang here on you know 20 stop, but you know, this could go back and forth and fill. It's as I said, very, very well overextended. I'm just forcing a trade because we haven't had a trade all day long today, so I wouldn't consider this to be a legitimate trade. But you know, if I want to hang here, I would. But you know, I'll give it up here. I'll give it up here. For like a -6, -7, and just let it go, because I don't think it's worth it. There's a reason why this wasn't a strong edge trade, and that's the thing. You know, it's hard to be patient and wait for really, really good setups, but it's worth it because your payoff is much higher. You have a much higher possibility of payoff than just hope. You know, so just yet another point proving that being selective makes sense. Yeah, the trading view indicator should be ready soon. We're working on it over the weekend. It's going to be nice and clean and sharp. And it's going to give us like lots of different permutations that you can play with. God knows, I know Mt5 is not MetaTrader is not a graphical user interface. You know, has all the glory of Stalinist architecture, but you know, it is a great execution platform. We're starting to pop, but I still, you know, still don't really love this trade. But I'll leave it to you guys. Everybody have a wonderful weekend. We come back next week. We'll hopefully have all the tools, and we'll start really applying this idea all across the spectrum that we have. Okay, guys. Everybody have a wonderful weekend. I'll see everybody later.